have the 4-hour price chart for Tesla Incorporated, stock ticker TSLA. So here we can see that the stock is currently trading under a fair amount of selling pressure. Most of the market is experiencing the same sort of activity at the moment. We're seeing tremendous selling pressure here. And as we can see in this price chart, that's another one of the names that's collapsing at the moment. Tesla is falling through its 100 period exponential moving average on this 4-hour price chart. So we can sort of point to that area here. Currently, the stock is attempting to find some support just below here at its 200 period EMA, which is the rising blue line here. But overall, the trajectory here is very clear because, the stock was attempting to stabilize a bit, but we have now seen share prices give way and lose support levels at very critical price levels. So in this video, we will be outlining some of these important price levels so that traders can make more informed investment decisions and trade this stock into profitability going forward. So currently what we're dealing with here is a price low that comes in at just above 205.80. This is a very critical level, as I said, because not only is this the 200 period exponential moving average, but it's also a very important Fibonacci zone as well. If we look back here to this prior trending move higher, very important trend move higher for the stock. This is really what sort of broke that ultimate downtrend and led to a reversal in the bullish direction. But if we're looking at this reversal period here, this very critical price period, we can see that the 50% retracement of that dominant move is currently coming in line right with this 205 level. So in many cases, a price level like 205 or 200 might be given psychological significance by the market because it's sort of a round number. But in this case, it's more than that. We're really seeing share prices here that could be in some major trouble if we do lose this support zone. So as we can see here, not only is this the 50% Fibonacci retracement of this dominant price move, but we also have this rising 200 period exponential moving average coming in line with this same area. So, the real question here is whether or not this move will head lower. And I would like to know what people think about this. Do you think that the stock is likely to continue these declines? Because one reason to believe that this might be the case comes from this indicator reading at the bottom of the price chart. So as we can see here, this is the relative strength index, the purple line. And we can see a negative trending condition here with prices that have not yet moved into oversold territory. So what this does suggest is that prices can continue to fall to the downside without reaching this important 30 level in the relative strength index, which marks oversold territory. So, this is interesting here because, we have seen some major declines here after failing at a double top, which I pointed out in a prior video. But after failing in this level, we have seen further declines here through important support zones. And even with all of this price action to the downside, we have not yet reached oversold territory. So what this indicator is telling us is that prices still have some potential here to move to the downside before this movement starts to become extreme. In addition to this, what we can see is that there is a falling, I should say, trading condition here within the market volumes themselves. The trading volumes here have started to decline a bit into these numbers. In many cases, that isn't surprising to see as we move into the Friday trading session. But given the fact that there is so much share price action here, in my view, what this looks much more like is that investors are starting to exit the market, and we're starting to see some reluctance with tech investors to try to capture these lows and bet on a reversal to the top side. So, this is a bit worrisome here because, what you would like to see would be, trading volumes that start to move in the positive direction. But we're not really seeing that here. We are seeing a decline in share price action. And this really means that in my view, what this really means is that investors are a bit scared at the moment and nobody's really willing to sort of have the confidence to step in and try to send share prices higher. This could be a problem here if we do break through this 205 level. The next level that I would be watching to the downside, if we did break below there, and I understand some people are going to be a bit concerned if I say this, but I do think that prices could fall below 190 if this 205 level starts to break. The reason that I say that is because that is the level that marks this, just below 190 is really what marks the 61.8% Fibonacci retracement of this dominant trending move. So, if we lose the 50% retracement and the 200 period exponential moving average, the next real line in the sand does come in here at roughly 190. And we do have some further evidence that this could be an important zone based on the fact that 190, 191.08 was the prior price high from the June 13 trading session. So this is a bit of a confirmation here in relation to the 618 retracement and this prior price high, which would now be expected to work as support going forward. So from here, we're just going to drill in a bit into the hourly chart just to take a bit of a closer look here at these trending price movements. And as we can see here, the movement lower has been fairly orderly. If you look at some of the other stocks in the market that are currently falling and declining rapidly, many of those stocks, have seen significant price gaps to the downside. But what we're seeing here is a much more orderly, stable type of price movement here. Especially when we compare this to stocks like Amazon or Intel, which are currently completely collapsing, just completely falling through the floor. So, this is a bit encouraging here for investors because it does suggest that, we could start to see a bit of a turning point here. If we look a bit more closely, we can also see that the individual candles themselves have not reached excessive lengths. In other words, we're not seeing major substantially large price candles, for example, like the one that would be seen back here. This was an area. This was a post earnings price reaction in the market, and as we can see, share prices significantly moved lower in a very short period of time. And even when markets attempted to stabilize here, we were still seeing very substantially large red candles. But this really has not occurred here. We're seeing a much more orderly, stable kind of price movement lower with candles sort of diminishing in size as we go. And what this tells me is that the stock does have a chance here to try to find some support at roughly 205. I think this is largely going to depend on what else happens in the market because we're seeing several major stocks just completely collapse right now. Intel and Amazon would be two very important examples. So these are the factors that we need to watch, and these are the price levels that we need to be watching. Here's the current market update for Tesla Incorporated, stock ticker TSLA. Our high-value trading strategies membership is currently available for a limited time for only $9.99 per month. These high-conviction investment strategies are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.